Hello, has your portfolio been taking some big hits recently in the market? Well, if your stocks are solid and have strong fundamentals and explosive exponential potential growth, then even if they do keep going down and even hit rock bottom over time, and history has proven this, the market, like Rocky, always gets back up. That brings us to what everyone is asking in these couple of weeks, which is what on earth is happening in the market. Stay tuned. This is going to be a short video that I hope will give you another perspective if you are seriously worried and looking for some guidance. Keep it simple. Before we drill into my thoughts on the current market, please note I am not a financial advisor, so please understand this is all for entertainment only. Okay, I know many people are very worried about the current market and what it means for their current investment. In this video, I will share some of my thoughts that I hope may help bring a different perspective to anyone who is seriously panicking or maybe wondering what they should be doing. Do stay to the end where I'm going to share with you what I will be doing with my freedom portfolio. Let's get straight into it. First, I think we have to take note that we have seen a monumental market run. From the crash of the COVID 1 year ago, we did see a little correction between last September to November before the market continued to uptrend, which is kind of similar to what we are experiencing now. Simply put, nothing can keep going up in a straight line forever, and this is even more true for the stock market. Let me ask you this: if the stock market did not start correcting in mid-February and continued to go up, would you be buying any stocks? If your answer to this is a yes, then let me ask you, why would you not be buying stocks right now when they are all on sale and a hell of a lot cheaper? I think the psychology of a retail investor has a lot to do with natural human emotion, which is the fight or flight mentality. What retail investors lacked in the history of investing in the stock market is knowledge and insight. The playing field has since in recent times changed, and information is now more readily available than ever before with the internet, and even many of the top investors coming out in interviews and sharing their thoughts and strategies.
Some people should not own stocks at all because they just get too upset with price fluctuations. If you're going to do dumb things because your stock goes down, you shouldn't own a stock at all. No, I mean,
what are dumb things? Selling a stock because it goes
selling
down?
a stock because it goes down. I mean, if you buy your house at $20,000 and somebody comes along the next day and says, I'll pay you 15, you don't sell it because the quote's 15. You look at the house or whatever it may be. Some people are not actually emotionally or psychologically fit to own stocks, but I think there more of them would be if you get educated on what you're really buying, which is part of a business.
It's simple. Retail investors only own around 15 to 20% of the stock market, and the rest or more belongs to institutional investors. With these massive declines, I can assure you most of the selling is by these institutional investors. Otherwise, it would be impossible for retail to move all of these stocks down at the same time so much across the board. Also, a lot of retail investors have got savvy and learned not to panic sell. I myself being one of these, and I'm sure there are many of you out there too. Warren Buffett, arguably the most successful investor in history, for me says it best: the stock market is a device for transferring money from the impatient to the patient. Who wouldn't want to be Warren Buffett, right? But what can we learn from him? Simply put, wealth is not created in a day or in a week. Wealth is created by investing and letting it grow over time. It's like planting a seed. You don't expect a harvest to come tomorrow, right? The only real edge we have is time. Current or paper value is simply that. It's just current value. Just because you're in the red now doesn't mean you're in the red, say, in 3 months' time. However, as soon as you do hit that sell button, that becomes real, and that's either you are up money or down money. Okay, the market has officially entered a correction where the market has declined 10% from previous highs. A lot of you, like me, may have seen more than this in your portfolio if it is built on high growth and especially tech stocks. Why is this? Simply put, the tech stocks have been the stocks that have been on fire and have seen the most gains in the last year. When a sell-off happens, it's simple math. fact that these stocks will drop the most, as some frightened sellers may look to rotate to more traditional or safe haven stocks such as banking stocks. So when will the market recover, or at least stop bleeding? Simply put, no one knows. But what one can say, based on historical data, is that the market will rebound and go up higher than the previous highs in February. I am personally setting goals for each stock based on a 1 to 3 year window, and the money I have invested, I am okay to lose all at a worst case scenario. Because of this, I am not losing any sleep over any of my current portfolio stocks. Let's take a listen to Cathie Wood of ARK Invest, who just had an interview live on Benzinga. Whether you agree or not with what she says, we should all agree that she is probably one of the most successful and possibly influential investors in recent times.
So you were at Jennison for 18 years,
Yes.
and then I think you went to AllianceBernstein, right? And there you had the exact same situation. You were made fun of, you may have been ridiculed, you were buying Amazon, and literally you had your investment meeting. And tell us that story.
Yeah, we were buying Amazon. It was $5 billion in market cap. I think it's up to 1.7 trillion now. So this was 2002. And I had to announce my trades every Monday morning. I announced Amazon, and you could have heard a pin drop, like, what? But we were convinced. I just knew online was going to become a big deal. As you know, Tesla wasn't going to have earnings for another, I think, 10 years. Yes, going against the grain. In fact, sometimes when the sentiment is so negative, and we have good reason to believe that something differentiated is going to happen, unexpected, those are great times. You know, I call them the valley of death. It's a saddled S-curve. The first saddle S-curve, it's kind of a fake out. Too much money chasing too few opportunities too soon. That was the internet, late 90s. Then in the mid 2000s, early to mid 2000s, valley of despair. Nobody wanted anything to do with these stocks. And then that's a great time to pick up stocks. And right now, 3D printing stocks have been there for a long time. And then you enter the sweet spot of the S-curve, and it's unstoppable.
I think she paints a clear picture for anyone looking to start investing, and that is, we can see that success takes time. What Cathie Wood goes on to say is what I really want to share with you at this point in the market cycle.
We will, in a sell-off, any sell-off, we will concentrate towards our highest conviction names. So during the coronavirus, for example, the crisis, we went down to 33 names in our flagship portfolio. Today, we're up to 55. So what we will do in an extended correction is we will concentrate the portfolio once again to the top 30, 35 stocks, because those are the ones in which we have the highest conviction, and it has been that conviction has been growing over time.
Now, I hope you got that. I myself am taking a similar approach, quite honestly. If you watch my previous videos, you will know that as my top stocks in my portfolio started doubling and tripling up in value, I averaged out some shares. Some of those proceeds I'd used to open small positions in other stocks, and some of it I kept in cash, precisely for situations like now. Finally, I just want to go over some actions of what I think you could do depending on your own situation. If you are not invested at all, but are looking to invest in stocks, I really think now is a great time, as everything is on sale compared to a few weeks ago. How would I do it? Simply research the stocks you want to invest in, set a timeline, whether 1 year or 3 years, and start a position by averaging in, say, 1/4 of the money you want to allocate to the stock. You can do this for a few stocks in order to build a nice looking portfolio. Okay, what if you already have stocks in your portfolio? Well, the fact that you bought the stock should suggest that you have done your due diligence and believe in them long term. The best thing to do, in my opinion, is to buy more if you can afford it, in order to take advantage of the bargain prices and average down your cost basis. If you can't afford it, then you have two choices: sell it if you need the money, or are worried sick, or just hold and do nothing. There is nothing wrong with locking in profits or a loss if you really believe the market is going to crash further or down to a point where there's no return. The only thing I would say is, if this is your belief, then tread very carefully, as you have to remember why you bought the stock on day day one. If you genuinely believe in the stock, I wouldn't be selling. Like I said, and like Cathie Wood, I would be trying my best to buy more. And if I can't buy more, I'm just going to hold it long term and watch it go back up. Trying to time the market is not long-term investing. Well, to me anyway. If nothing else, I really hope you can take this point away from this video, which is no one can predict and time the bottoms or highs in the market, and certainly not ordinary retail investors like me. Trying to do so will only cost you big in the long run, unless you have some ungodly luck on your side. For me, investing is 80% or more skill and only 20% luck. Thank you for watching, and remember, this video is based on my own thoughts on the current market and what I'm going to be doing. So please do your own due diligence and speak to a professional before you look to make any moves of your own in the current market. If you are interested in other explosive exponential potential growth stocks that I do have in my portfolio, please check out my other videos. For more stock picks, analysis and updates, please stay tuned and just consider subscribing to my channel so you get the information first. I am the Simple Trader. I try to keep this simple, and I hope we'll simply see you next time.